Hello everyone, I'm Justin Lin, investment analyst at Global X ETFs, and welcome to Express Lane. Last week, the US markets edged down by around 30 bips as positive economic data was met with negative Fed speak and fears around a US government shutdown. For our green light of this week, US economic data seems pretty strong and points to a Goldilocks situation as the Fed embarks on their rate cut cycle. US Q2 GDP was revised upwards to 3.8% year over year, which is its fastest pace since 2023. Unemployment claims also came in at 217,000 versus 233,000 expected, so that's much better than analysts had initially feared. For the yellow light of this week, Australian monthly CPI data came in at 3% year over year, which teeters on the edge of the RBA's inflation target range. That puts a severe damper on the odds of rate cuts, with money markets predicting now just 60% chance of one more rate cut by the beginning of 2026. Finally, a US government funding shutdown seems quite likely this week as the Congress have yet to reach consensus on a temporary funding bill. Now, usually, equity markets don't react too much on government funding shutdowns. However, this time around, investors are a little bit concerned that the critical economic data released by the BLS will be delayed. That would leave the Fed flying blind in a pretty critical moment for the US economy.